So right now we have a very serious problem here in the United States because we are seeing layoffs are slowing down, but long-term unemployment is actually picking up. It's turning into a massive problem. And I know a lot of people are really concerned that their job may not be there in the next several weeks or even several months. And that's a serious concern. But here's the problem. We are now being told that yes, this is likely coming, maybe not in 2025, but in 2026. And I'll explain more on this in just a moment. But first, all I ask is if you enjoy these daily updates, do me a favor, go ahead, hit that like button, and now let's begin. So here's where it all starts. It says right here, Federal Reserve Chairman Jerome Powell says Fed rate cut is on hold, even as Trump demands cuts. But here's what's very interesting, and this is where a lot of people, a lot of economists are kind of in agreement. Look at this right here. It says, Morgan Stanley predicts 7 Fed rate cuts by 2026. Now, they're expecting the benchmark rate is going to be right about 2.5 to 2.7%. That's substantially down from where it is today. But why? That's the question. Why does Morgan Stanley believe that we are going to see 7 rate cuts by 2026? Okay? And it's actually in 2026. They don't anticipate a rate cut in 2025. They expect it's going to happen all in 2026. Now, here's the reason why. They believe that unemployment is going to go up. They believe that inflation is going to come down. So if inflation comes down, and this is the biggest issue, okay? If inflation goes up, okay, and this is the problem. If we cut rates, okay, it's going to make it where it's easier to borrow, okay? Very easy to borrow. And so then people will go and spend more money. So that push inflation back up. That's why we need inflation to come down. That's one part of it. The second part is we need to ensure that more and more Americans are working. So number one, they can afford goods. Number two, we can continue to put some of the tax dollars into the places that it needs to go to pay for stuff here in the United States. Okay? But the big one is unemployment. This is likely going to go up as a result of a lot of the changes that are happening here in the US as we speak, but also because of AI. Bumble just reported, I believe today, that they're going to cut like 30% of their staff or something like that as a result of AI, as a result of using technology. They don't need a lot of their staff, and their stock shot up. Like, I can't remember what it was, but it jumped as a result of them laying off employees. Think about that. How scary is that? That companies become more valuable as they lay off employees. How crazy is that? Yeah, but look at this. It says right here, Kroger is set to close 60 stores across the country. We learned that the other day. But that's not it. Look at this right here. CVS is closing 270 stores nationwide. We know there's auto parts stores that are shutting down. CVS isn't the only pharmacy. Walgreens is closing down in many locations. Okay, Rite Aid shutting down. This is what we're seeing. There's hundreds of 7-Eleven stores that are closing down. 7-Eleven is the largest convenience store in the United States, okay, and shutting down. Okay, they're shutting down hundreds of stores because of theft, because of loss in profits. They're closing down. Those employees, okay, told to hit the road. Okay, we don't need you anymore. But look at this. There's more stores closing in 2025 as well. Joann, that's closing. Kohl's, they're closing. JCPenney's, they're closing. Macy's stores, they're closing. Yeah, we're expecting an additional 15,000 stores to close just this year. How crazy is that? That's worse than the peak of the pandemic. Yeah, we are seeing more stores close in 2025 when the economy is booming than when the economy was shut down and we had a pandemic here in the US. That's scary. But look at this. This came out just this morning from Reuters. It says US weekly jobless claims fall, but unemployment rolls swelling. Okay, I want to read a little bit of this to you. Look at this right here. It says, initial claims for state unemployment benefits dropped 10,000 to a seasonally adjusted 236,000 for the week ended June 21st. It says, economists polled by Reuters had forecast 245,000 claims for the latest week. The data included last week's Juneteenth National Independence Day holiday. Claims tend to be volatile around public holidays. Okay, I want to read a little bit more of this. It says right here, technical factors as well as the start of the summer school breaks have accounted for some of the recent rise in claims, which have pushed them to the upper end of the 205,000 to 250,000 range for this year. Non-teaching staff in some states are eligible to file for unemployment benefits during the summer holidays. Nonetheless, layoffs have picked up, and economists say President Donald Trump's broad import tariffs are making it difficult for businesses to plan ahead. Keep in mind, okay, and I said this before, July 9th is when the 90-day tariff pause expires. We are hoping there's going to be some answer before then. Businesses have no clue how to plan. They have absolutely no clue. But look at this. This is the real problem. It says job seekers in limbo as long-term unemployment persists. It says economic uncertainty creates difficult environment for those trying to enter workforce despite relatively low unemployment. Unemployment is not bad. Okay, it's not terrible where we're at today. But there's too much long-term unemployment. That's the issue. Some say that if you are unemployed for over 5 weeks, your chances of getting a job within the next, I think, month gets cut down in half or something like that. Or maybe it's in the next 3 months. It gets cut in half because you've been out of the workforce for 5 weeks. You may have lost a step. You may not know certain things, right? These times are changing quickly. So some are less likely to hire you simply because you've been sitting on the sidelines looking for a job for 5 weeks. It's crazy. Let me read a little of this to you. It says right here, the U.S. labor market is in a holding pattern with relatively low unemployment, but a slower pace of hiring has caused the share of long-term unemployed workers to stagnate amid economic uncertainty. It says the labor market, or the Labor Department's Bureau of Labor Statistics tracks the number of individuals in the workforce considered long-term unemployed, which is defined as workers who have been unemployed for 27 weeks or more. It says in April, and just keep that in mind, 27 weeks. Hey, 27 weeks. That's a massive amount. How many months is that? Okay, was that 6 months? Okay. Was 6 times 4? So a little, what, almost 7 months? That's crazy. Okay? That's absolutely crazy that people are still unemployed for over 7 months. Let me read this to you though. It says in April, the percentage of long-term unemployed workers as a share of the total pool of unemployed workers rose to 23.5%, the highest level in 3 years when the economy was rebounding from the pandemic. And in the midst of the highest inflation in decades, it dipped to 20.4% in May and has remained above 20% since 2024, April 2024.
I would say, at HireQuest, because
that's
we have
part of
a
the
network
issue.
of over
I want to read
400
this last thing
franchise
to you.
offices around the world.
Says an economist with the Indeed hiring lab told Fox Business that while economic data related to long-term unemployment can be pretty noisy on a month-to-month basis, she noted that the long-term trend is moving in an upward direction. It's continuing to go up, meaning more and more people are considered unemployed long-term.
We also experienced that.
Yeah, that's part of the issue. So, as to why the Federal Reserve and why Morgan Stanley believes that there's going to be 7 rate cuts in 2026, it's because of this right here. higher unemployment and likely lower
I would
inflation.
also say regionally,
Okay?
it's very
That's
important
what
as
we're
well
expecting.
in the jobs
So,
report that the
this could be
Southeast,
good news
which would be
for
more
millions of
consistent
people.
with the
This
construction
could also
industry
be
being
a
strong.
sign
We
of
saw
what's to
that,
come in
whereas
the
the
economy.
northern
So,
tier of the country
just want to share it with
was
you so
definitely
you
weaker.
can be prepared
Yeah.
for
No, I
whatever
understand
comes.
the
So
depth
again,
of
thank
higher
you guys for
costs, and that's
watching.
why I'm asking
Consider
you, where are the
subscribing,
jobs?
and I'll see
And
you
where are the
guys on the
opportunities?
next one.